Can Europe's economies stage a recovery this autumn? Well, we'll start to get an idea next week, and Andrea and Richard are here to discuss. Andrea, we'll get some Eurozone PMI numbers next week. What are the markets expecting there?
Okay, that's probably the most important piece of data that we've got next week for the Eurozone. Now, in August, we had some disappointment. The composite came in, let me just check, at 52.5, which was the lowest level since December 2013.
Right.
So hopefully we should get a little bit of an improvement there, and that should mainly come from the manufacturing sector, we think. Now, there are a few reasons why we might be seeing that that uptick there. ECB's recent actions, of course, that's had lots of exposure, improved global cyclical momentum. We have the FX effects as well, higher stock prices. So we've got kind of a build-up of momentum during that month. Let's not go crazy. It's only going to be a small uptick. And actually, the analysts, there seems to be some division. For example, I think Credit Suisse is saying 52.9 composite figure, but Nomura is actually saying a little bit of a slip at 52.0. So you never know, we might get a little bit of a surprise.
So if we see that uptick, will you feel encouraged at all, Richard?
Well, the other problem with the PMIs, though, is there's been a big gap between the PMIs and the hard growth data so far this year. The one place there isn't is Ireland, where the PMI is through the roof and so is growth at 7.7% on the year. In the second quarter. Everywhere else, apart from Spain has been doing very well, but Germany slowed down, Italy is back in recession, and France seems to be mired in going nowhere.
Fine. And we'll get similar numbers next week from China as well. What's happening over there?
Yes. Well, so the number last month was 50.2, so only just above the break-even level. And the data has been very patchy of late. The Chinese authorities have launched a new stimulus effort, some lending to the country's biggest banks, but it's not clear whether that's big enough to sort of move the dial in China, really.
Okay.
So people will be watching that number pretty closely.
Okay, let's swing to the US then. Lots of people speaking from the Fed next week. What are you going to be listening out for?
According to Credit Suisse, again, we have 7 Fed speakers standing up and giving their opinions next week. And obviously, in the wake of the FOMC meeting last week, it'll be interesting to see what reaction they have to the market reaction to the FOMC. So the sort of game of steering expectations. But the market, on the one hand, was reassured by the FOMC saying, continuing to say that rates wouldn't rise for a considerable time.
Right.
On the other hand, they looked at the dot plots that showed that rates were going higher. And Treasury yields have soared higher in September. Admittedly still well below where they were at the start of the year, but have moved higher. So people will be watching very closely for the tone of what's going on here.
Great. Lots to look out for there. Back home here then, Andrea, we've all had a sleepless night watching the Scottish referendum. No such excitement next week. But how do you think markets are going to react now that we've got the no vote and that's all out of the way?
Right, well, so commiserations to the yeses and well done to the noes. It's interesting. We've seen this a huge uptick in Royal Bank of Scotland, Lloyds Banking Group, other stocks that have been exposed to Scotland. We had some of those banks saying that they would move offices, their regional offices and their headquarters in event of a yes. So they're surging. Now, I think what's interesting from my point of view personally is now what happens to those banks. So that question has now been pushed out of the way. They still have many issues. They still have legacy issues. They still have those horrible fines that they've been dealing with. They still have to comply with some EU regulations in terms of their size and breadth. So the story's not over for them. So this could be slightly short-lived. Also, Bank of England. We're now on the path of when are they going to hike. I believe that first quarter 2015 is still consensus. So that's really where the conversation is going to go, and obviously the reaction with sterling, etc. as well.
Great stuff. We're back to watching data, not politics.
I'm afraid so, yeah.
Thanks, guys.